Hey folks, and welcome to this video. Today we're going to talk about a few things. I receive an email probably once a day from somebody who's asking me why they are not profitable in trading, and it's a really difficult question to ask. Most of the people who write share that they have had consecutive losses, and they're feeling frustrated because of this, and as a result they are essentially losing hope and not thinking that it's realistic to learn how to trade. So this goes back to kind of the psychology around trading, and so we're going to touch a little bit on that today, and we're also going to touch on a small and very simple methodology that you all know by now of how we can ensure that we're trading on the right side of the market in the direction with the major flows. Okay, first of all, trading psychology. A lot of people who trade, most people who trade, they like to share their periods of success. So they will tell you when things are going very, very good. When things are going bad, then they are less chatty. And this is quite normal, I think. I think the reason it's normal is because when things are going good, when you're happy, then you like to tell the world about it, and that's a normal situation. You know, you get something new, or you just feel happy because something good happened to you. You want to share this with the world. But when things aren't going so good, you feel sick, or you lost some money, or someone said something to you that wasn't nice, then you maybe keep this to yourself because you're feeling sad, or for whatever reason. And the same applies to trading. When you're killing it, you're happy about it, and you're talking about it, and you're sharing your trades with everyone, telling everybody how clever you are. But when you're not killing it, and you're losing money, or breaking even, or perhaps performing in a way that doesn't meet your expectation for yourself, well, then you become a little bit quiet and upset, and maybe even discouraged, and worst case scenario, quite depressed about the situation. And both of these situations are normal. Okay, I lose a ton of trades, a lot of trades. Sometimes I lose more trades than I win. And that's okay, because I know that over time things will get better, because I have my edge, I apply it to the asset that I'm looking at, and over time I know that the curve will slowly move higher. I mean, this is life as a trader. This is what it's about when you're trying to make a living in a marketplace that is unpredictable. You can't predict it. You can only present the probability of an event happening. An asset appreciates or depreciates in price, but you don't know for sure. You don't know for sure. Then you have flash crashes like what we saw in the pound, and the monetary policy in Switzerland and in Japan. These things have crazy effects on the markets, and so your pending limits or your alerts, whatever, or your open position just gets slaughtered. Maybe you win those, maybe you lose those. It's so difficult to know what's going to happen, and so you have to make sure that you protect yourself in the situation that you're not in front of your computer to act. And I try to keep orders out that are less than the daily chart. If they're on the daily chart, then I think it's fine, then I'll leave them open. But if they're on the 4 hour and the hour, then I normally take them out when I go to bed. Sometimes I see a delicious pattern, and I'll put my pending limit on, for example, the 4 hour, and I wake up and it's a loss, and that's super frustrating. But that's a lesson to me to stick to the plan that I've outlined for myself. And when I don't do that, I seem to get punished, and I think being punished is a good thing, because you pay more attention to your mistakes when it stings a little bit. If there's no consequence when you make a bad decision, well, then you're never going to learn anything. Okay, and so try to make a rule set for yourself that can help you when things aren't going your way. Okay, for me, I like to trade. I like to look at the weekly and the daily and the 4 hour chart. I don't mess around on the 30-minute chart unless I'm sitting in front of my computer watching the trade, because if you walk away, often case things don't turn out. Market volatility has all of a sudden introduced, some economic data release happens, and things go, liquidity dries up and volatility increases, and so you have to find a way that you can live with. And I can sleep with daily orders in the market. I can't sleep with 30-minute orders in the market, because when I sleep, it's kind of the end of the European and the North American market. So liquidity dries up, volatility increases. Why? Because volatility is a function of available liquidity. Okay, and so I've got my pending order in the middle of the market, and volatility is high potentially, and so I'm setting myself up for a loss. So I really need to stop this. Okay, and so I do this by not doing it. Okay, so you really have to pay attention to these things. But it's okay to lose. I lose all the time. All of the successful traders I know, they lose all the time. That's normal. A lot of people want to win all the time. They want to win 80, 90%. Some can, but they can do it for a limited amount of time. Why? Because they're doing something to ensure that their hit rate is high. It could be that they're not using stops. It could be that they're doing something else. But sooner or later, you get nailed by a British pound crash or a Swiss franc crash. You really, really have to protect yourself. Okay, and so in a situation like trading, or an activity like trading, the same applies. The same applies. Okay, so what do I mean by all of this? What does all this mean? Well, it means that we have to outline a plan for ourselves. And I'm not going to create a trading plan here and now, but we will talk about something that'll help you sit on your hands when you shouldn't be trading. And I'm writing this new function that I really like, and we talk a lot about this at Pipnotic, and this is the whole concept of boxing, where we have the buy side of the market here, and we have the sell side, which has not yet formed. Okay, and here we have the buy side, and the sell side is just starting to form. You can see this little red box forming over here. Okay, and that means that price is slowly starting to move away. What does that mean? Well, that means that we are correcting. We have a really nice move higher. We have the buy side. We have the buy zone, which is down here. Okay, and now we're starting to retrace, and the box starts to draw this when we have like some candles kind of moving in the opposite direction. Okay, and so what do you do? Well, first of all, if you're a beginner, I recommend that you slow things down a little bit, okay? Because maybe you're working, you don't have time to look at the charts all the time, and trying to trade the 15-minute chart is going to be an absolute nightmare, and you're setting yourself up for disappointment and a lot of other bad emotions, and so don't do it. Go to the daily chart or the weekly chart, the lowest, the four-hour chart, and just focus on the super clear patterns that you see on these time frames. Okay, this is a really clear pattern. We have the buy zone. We have a market that's moving higher. This is the dollar index, by the way. Super clear. I mean, there's no mistaking this, is there? Okay, this is what we can expect to happen. Price might not come down there. We might only come down to here. We don't know, but you have to make a decision. I like this one here, so I'd expect price to come down here. Why? Because we had this area here, price came down to it, the slingshot was pulled back, we moved high, we moved above this high. Okay, so now we have 50%. Okay, so up here, this is expensive, this is cheaper. This is average price from this high to this low. Okay, so if price is all the way up here, would you want to buy? No, you wouldn't. You would wait for price to come down to at least the middle of the box. Okay, and the reason I have this box is because it enables you to visually see this. Okay, you want to be down below the middle half. You don't want to be buying anywhere up here. Okay, you want to wait until price comes down to here, to this area here, or this one down here. And what I've done with fibs, I've just set it up so that I have this where I can see the middle of the box, 50, 60%, 70%, 80%, 90%, 100%. Okay, and this is 50% give back from the highs, 50% of this move, 60, 70, 80, and 90. Okay, and the lower you go down, the higher the probability that the trade will work. Okay, so trading up here in the 30% is just a really bad idea. Matter of fact, I took a loss on a trade the other day where I was buying really low because the pattern looked so good. I got stopped out, and it's kind of like, in a way, I'm glad I got stopped out because I shouldn't have done it. but I thought I could slice a small trade out there, but it didn't work. Okay, and that's because I was trying to do something like this, and as a matter of fact, it was something like this. This is the weekly chart. We have this is the buy side, and I was trying to buy, actually it was upside down, and I was trying to sell at a very low price, and I got stopped out. Okay, the same thing here. You don't want to be buying up here. Okay, we're very high. Okay, so be careful. Okay, on the weekly chart. The weekly chart can go on like this for a long time because it's a very slow chart. The daily chart is a little bit faster, and so you want to just be a little bit more careful. Okay, if you go to the 4-hour chart and you're trading at the highs here, it's a really bad idea. Okay, we had this one here. Okay, this one worked. We tested a few times and price finally went down and moved through it. But we know here that we're moving down. We've defined the sell side of the chart already, which you can see here. And so buying anywhere here would be a really bad idea. Also being mindful of the fact that we are super high. Okay, but we have not yet started to paint that red side of the chart, telling us that, okay, now we can see some smaller time frames, some micro areas of supply forming above price. Also pay attention to the fact that we have this, okay? We have the bear cycle ended, the bull cycle started, and what's going on now? Well, this is a cycle, okay, from here. This is a complete cycle, okay, and we are just about to end the bull cycle. Okay, this is the American dollar. Okay, so we can see that we started to do that here. We started to go higher, lower, warning signs. We have not yet started to do that, so we could see another run higher. The histogram will probably do something like this, and go something like that, and then we know, okay, then it's time to sell the American dollar. And we all know this is going to happen. We all know it's going to happen. And so a little bit of common sense goes a long way as well. Okay, so use the boxing technique. The update is coming out very soon. If you don't know how to do it yourself, the software will be updated shortly, and then it'll do this automatically. And just pay attention to this, and sit on your hands when there's nothing to do. Don't force things. Just wait for the software to tell you what to do. And if you don't have the software, just look at the major swings, mark off the major swing, okay, from like a strong swing from here to here. Okay, and this is strong because we managed to move above here. Okay, as a matter of fact, we have another swing in here from here to here. This is also a strong swing. So we could do a box here as well if you want to. 50% of that box is around right here. Okay, so this could be an interesting area for a small bounce. For me, I'm going to take the whole swing from here to here because this is a slingshot. We had the high, slingshot was pulled back. We moved above this high here. This is about 50% of the box. So I'm going to be looking at least to here. We have buy zone established. These are the tests. This is about 70% retracement. Right here we have a nice area of demand that's formed, and you can see how price rallied away from that. Okay, and so yeah, try to do that. Try to wait for price to come to you. Don't chase price. And if you lose a few trades, that's fine. That's how it happens. It happens to me all the time. People who tell you they don't lose trades, they're riding unicorns to work. Okay, so focus on reality. High prices, you don't want to pay for anything. Low prices, you want to buy. You don't want to sell at low prices, you want to sell at high prices, and the same applies to this. Okay, so try and keep all of these things in mind. Okay, well, I'm going to leave it at that. If you have any questions, let me know. If anyone wants this discussion to be kind of dragged out a little bit, I can do another video where I go into detail about any other aspect of this. Just let me know, and I'll be absolutely thrilled to help. Okay, checking out. Thanks so much for watching.